If you woke up and saw Pi drop from almost $3 all the way down to a few cents, or watched Bitcoin tumble from its new all-time high back into the 80,000 range, you're probably thinking one thing: what just happened? And honestly, you're not alone. The year 2025 hit both Pi Network and Bitcoin like a wrecking ball, but the reasons behind their crashes couldn't be more different. Today, I want to walk you through what really caused these huge drops, what they mean for the future, and whether there's any chance of recovery. No hype, no sugarcoating, just real talk. When Pi finally showed up on exchanges earlier this year, the excitement was unreal. After years of mining on your phone, years of waiting, hoping, and arguing online, the price hit $2.99 and people actually felt like the dream was becoming real. For the first time, pioneers saw a number attached to all those years of tapping the app. Then September arrived like a slap in the face. The price didn't just fall, it collapsed all the way down to around 25 cents. That's a 90% blow. Imagine watching something you waited half a decade for get wiped out in a matter of weeks. A lot of people, especially those who bought near the peak, felt betrayed. Confidence shattered instantly. Bitcoin, on the other hand, was riding high at $126,000 before its own massive correction. When it plunged to around $80,000 in December, billions vanished across the market. But Bitcoin's crash wasn't because of distrust or development issues. It was pure market psychology. Too many traders went all in with leveraged positions, and once the price dipped just a little, a wave of automatic liquidation started hitting. In just 24 hours, hundreds of millions in positions were wiped out, and trading bots turned what should have been a normal pullback into a sharp, fear-driven free fall. Just like that, the whole market flipped into panic mode. Pi's crash was all about trust. The moment things started slipping, people were calling it a scam, a rug pull, a broken promise. The Pi team tried to hype new features like decentralized trading and automated market making, but instead of restoring hope, these announcements made the situation worse. The community felt like the team wasn't addressing the actual problem, which was the price cratering. Meanwhile, the Pi community became split down the middle. Some were trying to stay positive, talking about long-term visions and global consensus, while others stared at their shrinking balances and wondered if they were just being optimistic for nothing. Bitcoin's community responded in a completely different way because it has history on its side. Veterans have seen worse, and they've survived much uglier drops. To them, this was just another cycle. Instead of panic, many long-term believers said things like, "See you at 100,000 soon," or, "Buy the dip." People calmed down even more when major figures like Michael Saylor gave signals that they were accumulating more. That's the kind of confidence that comes from having a decade and a half of proven growth behind you. Meanwhile, Pi has mostly new investors, many of them first-timers, who expected fast life-changing returns and weren't emotionally prepared for this kind of volatility. Even in the middle of the chaos, both Pi and Bitcoin showed signs that they weren't done yet. Pi pushed out an upgrade using AI and announced meaningful progress on regulatory compliance in Europe. That at least showed the team was still active, still trying to build real infrastructure. The price got a tiny bump, not much, but enough to remind people the project wasn't completely abandoned. Bitcoin's rebound was far more dramatic. It jumped from the high 80s back into the low 90s within hours thanks to a massive short squeeze that wiped out millions in bearish positions. Suddenly the mood shifted from panic to cautious optimism. But the most interesting insight came from whale activity. During the dip, huge institutional players were buying quietly. That kind of buying is what forms a price floor. When the big players show confidence, smaller investors tend to follow. Bitcoin thrives on this pattern. It's a market shaped heavily by institutions, companies, and long-time holders. The question is whether Pi can ever reach that level, or whether it will remain mostly a community-driven token supported by everyday users rather than major financial players. If Pi is going to recover, it needs more than hope. It needs real products that people want to use. It needs more liquidity, more exchange support, clearer token utility, and functional apps that prove Pi has a place beyond speculation. If it can't deliver those things, then no amount of community positivity will push the price back up. Bitcoin's path is much clearer. As long as it can push past $91,000 again and retest the $100,000 mark, it has the potential to move back to its previous highs. A break above $126,000 would officially signal that the correction is over and a new bullish phase has begun. But Pi's road is longer and harder. It doesn't just need market momentum, it needs execution. It needs strong development, adoption, and real value creation. Without that, every recovery attempt will be short-lived. Let me be completely honest. Bitcoin has earned its place. It's been around for 15 years, survived every crash you can imagine, and continues to be adopted by governments, companies, and institutions. It's volatile, sure, but it's proven. Pi is different. I genuinely want Pi to succeed. The concept of a cryptocurrency built for everyday people is powerful. The community is passionate and global. But passion alone won't carry it forever. After all these years, Pi still needs clearer utility, clearer direction, and more evidence that it can grow beyond its community bubble. If you mined Pi for free, holding it is a personal choice. But if you bought Pi at the top and you're now down 80 or 90%, you need to really ask yourself if it makes sense to keep averaging down, or whether you should put that money into something with clearer fundamentals. The project can still succeed, but the next year is critical. It needs momentum, not promises. The crypto space is fast, brutal, and constantly evolving. One day something is the future, the next day it's forgotten. Prices move violently. New projects appear and disappear like waves. In a market like this, emotions can destroy your strategy faster than any crash. Fear makes people sell the bottom. Greed makes them buy the top. The truth is, patience is one of the most valuable skills you can have in crypto. Diversify. Do your own research. Understand why you're investing so you won't get shaken out by every dip. Despite everything, the long-term future of crypto still looks bright. Innovation is speeding up. Adoption is expanding. And every correction, no matter how painful, sets the stage for the next phase of growth. Crashes aren't the end. They're part of the story. If this video helped you understand what's going on, make sure to like, comment, and tell me honestly, are you still holding Pi? Did you buy more Bitcoin? Or did you sell everything? Subscribe and turn on notifications so you don't miss the next update. Check the description for my Telegram and Facebook where I share information I can't post here. We're all navigating this together. No one has all the answers, but sharing real information makes us all stronger. For the Pi pioneers who still believe and the Bitcoin holders staying steady, your journey isn't over. Crypto rewards those who stay informed, stay patient, and stay grounded. Protect your investments, stay smart, and I'll see you in the next one.